Good evening and welcome to this session of the virtual coaching classes, live virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. In the last few sessions, I'm sure when I handled it, I introduced you to incorporation of companies. And from there, I'm sure you went elsewhere, but we are back on track, like on the next topic, logically, which is prospectus and allotment of securities. The whole point of forming joint stock companies is to, broad base the ownership so that promoters can take more risk and invest heavily, thereby making profits which are shared between themselves and the shareholders. So, the Companies Act is meant to promote this. The company form of organization is meant to promote this. Separate legal entity, perpetual succession, and free transferability of shares. Free transferability of shares. Okay, so that companies, of course, with limitations. I hasten to point out, for a private limited company, there is an automatic limitation, etc., etc. There is a restriction on the transfer of shares, etc. But for a public limited company, no such restrictions. The shares of a public limited company are freely transferable, whether listed or not. Even unlisted public company, the board of directors cannot refuse. We'll see that later when we come to share capital and transfer of shares. I'll tell you more about that. But the point here is, the whole purpose of floating a company, in those days at least, was to collect money from the public for a project. So the promoters were eager to start a project or start a business activity. The project needed money. So the promoter had only X. Now he needed, say for example, 5X. So where would he get the balance 4X from? X is what he's willing to bring. Okay, if you want to put a number on that, let's say the Reliance Group wants to, okay. Maybe because I have Mr. Milton Kumar Mahanta says I look a little bit tired. Could be, because I didn't actually wash my face. I'm very sorry for that. I'm not tired. In that sense, I'm not tired. Yeah. I was traveling heavily for the last 4 days in Kerala. And so today morning, I landed up at Chennai. This could be that. And then I had a stint in the office and then I'm back for the session. I don't know. Anyway, thanks for pointing that out, but no problem. I hope the voice is still energetic. Huh? Don't see the face. Huh? The voice is more important. And I hope you are happy. Thank you, Ji, for that nice comment. Coming back to the point, whole point of forming a company is to issue a prospectus. So I was going to give you numbers. Let us say that Mr. Mukesh Ambani, Reliance Group, wants to start a new project. Just for the sake of, calculation, let us say Mukesh Ambani wants to get into a new project. Let us say the project is with regard to, for example, Reliance Solid Waste Disposals Limited. Reliance Solid Waste Disposals Limited. Now, any project Reliance does, people are eager to invest, right? So what would Reliance do? The promoter of this project is not Mukesh Ambani. It is Reliance Group. It's a slight difference we'll see later. When a group is promoting, no, the promoter is the group. Right? Though, of course, Mr. Mukesh Ambani could very well be director, etc. Now, the promoter, let us say that the project is, for example, 2,000 crores. 2,000 crore project. Promoter is already, project report is prepared, vetted. It's got all the clearances, etc., etc. Now, 2,000 crore project. Mr. Ambani will bring in only, the group will bring in only 200 crores. I'm not joking. 200 crores. Promoter's contribution. That would be used for developing, starting the company, developing, etc. Accounts will be there. Then, using this 200 crores, Reliance Solid Waste Disposal Limited will go for a public issue equity. Obviously, Reliance has an advantage. So, they'll get a good pricing, etc., etc. So, share premium also will come. Let us say totally they are able to raise, and they can easily do that, into 4. means 200 into 4. Let's say they get another 800. 800. So 800, for example, 800 crores public issue, 200 crores promoters contribution, 20% of the post issue, pakka, no problem there. And possibly taking you to SEBI, no need, don't worry. Later on, you learn this again in SEBI. But this is to give you an introduction to prospectus practically. So his own money, 200 crores. Public money, he will get 800 crores. Right? Then 1,000 crores he's got. The company has got 1,000 crores now. They need 2,000 crores. What they will do now? They will leverage. Now with this 1,000 crores and the project, they can go to any big bank, State Bank of India, IDPI, ICICI, and they will borrow the balance, 1,000 crore. So look at the balance sheet now. Debt, 1,000. Equity, 2,000, of which 200 belongs to the promoters. And the balance on the asset side, you have the assets, project assets, 2,000 crores. And the business starts. They make money, they declare dividend. That's it. That is the Reliance success story, sir. This is Dhirubhai's success story. And all this is possible because of the company form of organization and the prospectus. Okay. I've given you a positive, shall we say, story of, friend Kaveri Ji, can I have your confirmation that my voice is okay? Because suddenly you put your voice is low, but now is it okay? Thank you. Okay, some more other people have put in a word. Thank you, Kaveri Ji. Thank you. Okay, now coming back, I gave you a very, very positive side of things. On the other hand, suppose there is a fellow who wants to cheat the public. He floats a public issue. Same logic. He goes for, say, smaller project, 200 crores. He puts only 10 crores. He raises another 40, 50 crores. Balance he borrows. Assuming, or maybe he borrows, he raises 80 crores with a 20 crore investment. He raises 100, total 100, then 100 borrowed. Same logic, same number. But this time, this guy is not interested in running the company properly and like Mukesh or Dhirubhai Ji. See, Dhirubhai and Mukesh, for all their complaints about them with due regards, maybe this is not the forum, but still to make a point. See, you might have 101 views about how they make money, blah, blah. But when it comes to investors, that is one investor-friendly company. Dhirubhai, Reliance is one investor-friendly company. They treat their investors too well, right? Because they know that whenever they want, they can go back to these guys and they'll give them any amount they want. That is important. So using the same IPO route, this fraudulent bugger comes in and raises 180 crores and he borrows. Classic story, Indian story. This guy goes around doing nothing, siphons the funds, mismanages the company, blah, blah, blah. Finally, company goes into liquidation. Now, that is also possible. Now, how to protect the investor from the second category people? Or rather, how to... So that is the goal of this entire chapter. And throughout this chapter, what we are trying to do is, I can't protect the investor like that. I can't prevent him from writing a check. But what I can do is ensure that the disclosures are properly made, that the valuation is correct, that the assets are there, that the promoters do not have any criminal acts against them, etc., etc. So that such information, when provided to the public, if knowingly they invest in this fraudulent fellow's company, now nobody can protect them from their own ignorance. But I can give him knowledge. And with that knowledge, still, he goes and gives money on a fraudulent IPO. And till 2027, you're going to see all sorts of nonsense IPOs coming in. Okay, LIC was the beginning. You're going to see so many useless companies coming in for public issues. Believe me, and useless, my word, maybe at that time, everybody will say they are great. 5 years down the line, when the market collapses, these fellows will be nowhere. But how can I protect the investor? I can't protect the investor in that sense from everything. But I can give him information. So all the provisions relating to prospectus are meant to provide information and disclosures, and also to ensure that if somebody makes a fraudulent claim in the prospectus issued to the public, and that is shown to be fraudulent later, they will be punished. So this chapter also provides for liability. We will be seeing that in detail later. Okay, so this is contained in chapter 3 of the Companies Act 2013. It's called the Company's Prospectus and Allotment of Securities. Rules 2014. Occasionally, we will also see the rules. See, this is one chapter which has two parts. Part one is public offer. What I was talking about, IPO, FPO, etc., etc. That is 23 to 41. Sections 23 to 41, major portion public offer we are seeing that. सिर्फ एक section है ना, only one section, 42 deals with private placement. It's got a set of rules also. That one rule is there along with this section 42. Single section है part 2 में. That is private placement. Public offer 23 to 41. But for the sake of convenience, they have separated as part 1, part 2. Part 1 public offer. Part 2 private placement, where I am not making a public offer. I am only sending a personal letter circular to a limited number of people. We'll see this when we come to 42, possibly in the last session. Okay. So let us enter into the wonderland of investment. Okay. And look at the various things, issue of securities. I gave you only one example. That is, public offer again can be divided into 3 categories. Public offer can be again divided into 3 categories. IPO, that means initial public offering. Initial public offer. LIC was an IPO. Why? Because for the first time the company was formed, this is the first ever offer to the public. Okay, so that is called IPO. Every public issue is not an IPO. Only that first time when they come. After that, the company will become listed now. So then it will be a listed company. So when a listed company is issuing public shares again, offering to the public again, that is called further public offer. FPO, further public offer. In addition to this, there is one more category called OFS. Okay, offer. You might, if you have a paper, pen, write this down. Not because I can't expand it here, but just for your आपका ज्ञान से लिए. Okay, just write it down. IPO है initial public offer. FPO, further public offer. Third category, offer for sale. What happens? Let us say that the company has been functioning for 10 years now, or 20 years. Now, the promoter also having shares now. Maybe he's having 50%, 60% stake in the company, and public having only 40%. Now, the promoter wants an exit, but the 20 years he's been there. Now, maybe the owner is also becoming older. The family wants to take some money out. How they will do that? When the IPO is made along with the IPO, along with the IPO or FPO, whatever, even it could be an IPO. Even an unlisted company could get listed, and along with that, the promoters can come out with an OFS, offer for sale. Many times, when a public sector enterprise, PSU, public sector undertaking, forms itself into a company and offers shares to the public, government will also come out with an OFS. Because government is the owner of shares. Government having shares there. So the government will give OFS, offer for sale, on the same terms as the IPO. So in other words, if the share price in the IPO is fixed at 450 rupees, the OFS also will be for 450 rupees. The only difference is, instead of subscribing for fresh shares, the applicant will be buying it from the promoter. So you get the point. This OFS document, offer for sale document, should be, it is like a prospectus. All the disclosures should be there like a prospectus. So they got a special section for OFS. Okay, all this, again, I repeat, my dear friends, IPO, FPO, OFS can be done only by public company. Private company has got prohibition. In his articles, he's got a prohibition. He says there is a prohibition for invitation to the public for any shares in or debentures of the company. He cannot issue a prospectus. Therefore, please make a note. Public company only can go for IPO, FPO, OFS and all. Private company, no. Maximum they can do private placement. Both public and private can go for private placement, right? Private placement. They can make an offer to a group of people and selected group of people. We'll see more about that when we come to 42. Don't worry. In detail, we will see. What is that limited number? How that offer letter should go? etc., we will see. Strict rules are there. You cannot use private placement route for making public offer. It should be very private letter. I will talk about it more when we come there, right? Chennai, there is a company, a very big group company. I'm not going to name that company because the process is still underway. They are coming out with an OFS, IPO come OFS. Okay, it's a big Tamil Nadu-based group. In that group, this company is there. You will see the OFS. I mean, you will see the IPO and OFS. In fact, they have already filed it with SEBI, I think. Okay, so it's there. We'll talk about it. Now, in addition to this, there is something called rights issue or right issue. Rights issue is it? Right issue, rights issue. Right issue also. That doesn't really matter. This topic on rights issue and bonus issue, we will cover when I am talking about share capital and debentures. At that time, I will talk to you. Right issue, it's a very detailed legal issue there, I will tell you. Similarly, bonus issue, there is a separate provision there in the Act now. Earlier, the Companies Act 1956 did not have a provision for bonus. No section. Now there is a section about bonus issue and from what you can issue bonus shares and all that. When we come to share capital, we will deal with that. But right now, as a summary, we are saying public company can do these four things. Can make an IPO, FPO, OFS, which is a public offer. Or it can go for a private placement. No problem. It can go, provided it complies with that section, right? And as a listed company, there are some more duties. If only it does that, it can go. Why not? A listed company may want to privately place some shares to a joint venture partner or to somebody. They can do that. Nothing wrong. Rights issue, of course, bonus issue. We'll talk about it later. Private company can only go for private placement. If you want to collect money, you have to privately place it. Because in addition to this, private company also has limitation on number. The number of members is limited. Am I correct? So that is why you have to be careful. Private company cannot go all out and issue advertisement and all. Again, I'm repeating because some students ask this question repeatedly in the whole class and all. Public company only can go for IPO, FPO, OFS. Private company cannot go. If it wants to make a public offer, the first thing it should do, we saw in the last topic, it has to convert itself into a public company. Only then it can go for IPO. Okay. Moving on, this is very fundamental basics. Now we go to certain definitions. Now, this particular definition, it links the definition of security to an enactment called Securities Contracts Regulation Act, SCRA, not in your syllabus. Inter or final May, it's not there. It was there, now they have taken it out. Securities Contracts Regulation Act, which deals with listing of securities, control of stock exchanges and all that stuff. Not there. That act only defines. See the word security, whenever you see it, remember, there will be a link with SCRA. Either the section will itself say security shall have the same meaning as it is given in Securities Contract Regulation Act 2H. Okay, or as in FEMA, they may define it, but broadly in the same way as SCRA. They may define it for you. Okay, whatever. Now, the definition of security is an inclusive definition. I don't know why my voice is getting lower. I'm raising it like anything and I'm near the mic only. Kindly check my suggestion, no, kindly wear a earphone. I don't know. Yeah. FPO could be further public offering or offer, it doesn't matter. Okay. Let's not split hairs on that. I will go by what you say. Further public offering, whatever, or offer, whatever. Okay. Reliance is public or private? Aap boliye na, Mr. Raghavan. Reliance is a 100% public company. Reliance Industries Limited. Suppose it's a private company. How will I know that? Reliance Industries Private Limited. The word private will be there in the name. So check out Reliance name anywhere on the website. You will see Reliance Industries Limited. So the minute you see self limited without the words private, then it is a public company, right? Offer for sale, I will not explain once again because I'm going to talk about it separately in detail. What do you say? Swati ji, I'm going to talk about it in detail later. Right now, try to wrap your brain around this. promoters are already holding shares in a company. Already holding now. Those shares they will offer to the public. They will make an offer to the public. So it will not be freshly issued shares. It will be already shares held by promoters which will be purchased by the public. Obviously, in those cases also the public should be given proper information, right? Those rules are there in this topic, which we will see. Baad mein we will see it in detail. At that time, I will tell you. Abhi just if you can understand what I said now, good. Otherwise, sorry. Okay. Any more comment about my voices will either way will be ignored because this is my limit. I cannot. I'm near the mic. I'm doing my best. Okay. So please do not. My humble request, those of you who feel my voice is not coming audibly, humble request to you, which I do that in some when I attend online workshop. See, I'm also a student. In other case, I study astrology. I go for other webinars and all. Wherever I go, if I find some voice problem is there from the other side, I immediately use my Bluetooth speaker. I'm sorry, headphone, so that automatically voice will become better, right? Humble request. You know, my philosophy in life has always been, instead of blaming my environment, I will always see what I can do to make it better. I mean, this is not to do with the voice and all, general comment arising from a thought. Okay. Whenever in my life I came across some difficulties, I'll simply not bother about the other person. I will think, what can I do to make this better? First level. Then and only then I will look at what I can ask the other person to do. Okay. This is the philosophy of life. 56 years I've lived, nothing has happened. I've become independent. Not dependent on anybody. Today, nobody can make me bad or sad or unhappy without my permission. They can't make me feel bad without my permission. Okay. Whatever they say, good, bad, ugly. Okay. Good also, bad also. Okay. Chalo, good, like that. Whatever you say, good. Okay, going on. So, securities definition is just there for you to know. No need to mug it up. Just try to understand it. No need to mug it up and all that, but try to remember the broad ideas. Shares, scrips, bonds, stocks, debentures, debenture stock, or other marketable securities. Now, the word stock needs a lot of explanation. Will be done in share capital, not here. Similarly, we will cover debentures separately in share capital and debentures a little bit later. Scrip, any listed company ka share na, a share which is being traded on the stock exchange is also known as scrip. Means now Reliance Industries Limited shares are quoted on a NSE and BSE. So it is called a scrip. It's just a code word, especially in Mumbai and all that, where they use the word scrip. So scrip or share, same. There is no difference. Except that share is the legal term. Scrip is the name used in stock exchange. In the stock exchange, they will say the scrip went up by ₹5. That means the share went up by ₹5 today. Whatever. So the word scrip is a synonym for shares. To avoid confusion, they said shares, scrips, bonds, stocks. Again, I will show you later when we come to debentures that the word bond includes debenture also. But in India, when a company issues a bond, we call it debenture. Okay, I'll tell you about that later. So they've given all the words or other marketable securities. So the word security as used in SCRA and the Companies Act talks only about shares of listed companies. Rather, companies whose shares can be sold on a market, or debentures which can be sold on a freely traded on a market, marketable securities, right? Similarly, you have derivatives. Derivatives, seriously don't go there. These are sort of contracts which are based on the price of the shares. Share prices are moving, right? Based on the price of shares, when you take different positions, this is called derivative. 100% somebody will teach this to you in finance. Don't worry. In finance, at the higher level of finance, either in inter or final, I think even in inter you have derivative as a part of your finance subject. There they will teach you. Don't worry. Basically, it's contracts. Derivatives are contracts entered into by people based on underlying prices of shares, commodities, anything. Okay, you can have a derivative. a little advanced, but since the word is used here, I'm trying to give you a simple definition. Units of collective investment schemes. Okay. Under the SEBI Act, you can have a collective investment scheme, like a portfolio scheme. Only if selected people will be members of that, and that scheme will issue units. Again, it will be registered with SEBI. So very transparently, somebody becoming a owner of that unit, it will be registered. Security receipt under the Surface Act 2002. Chalo, just let's leave it. Units of mutual fund, etc. Except ULIPs, unit linked insurance plan. Unit linked insurance plan, ULIPs scheme. Unit linked insurance plan scheme. Not covered. The reason is, see, unit linked insurance plans are similar to units of a mutual fund, except that, see, the entire money that you give to a mutual fund is invested in the market or in those assets. Whichever asset he says he's going to invest, your entire amount will be invested, subject to some administration cost. Balance 100% will be invested in those assets, maybe debt instruments or shares or whatever. But in ULIPs, what happens? No, 60% only goes, some proportion only goes into the market. Remaining amount is actually meant for covering life, so that if that person dies, the entire policy value will be given to him. So for the life cover portion, there's a small amount. Therefore, ULIPs are not securities under the Companies Act. ULIPs of insurance companies only issue this. Okay, it's not. Also, any special purpose distinct entity, okay, is issuing a certificate or instrument to investors. Chalo. Government securities, when government is issuing bonds, they are called GSECs, government securities. These are all covered. Such other instruments as may be declared by central government. So central government can add anything more. Finally, right or interest in securities. Okay. When I come to Reliance, when I come to rights issue, I will tell more. Right now, it's simple. Suppose you are a shareholder of a company. That company is coming out with the rights offer. You are entitled to buy that share now. That is a right now. That right itself can be sold in the market. For example, when Reliance Industries Limited came out with a rights issue in 2020, Reliance Industries Limited came out with a rights issue in 2020. Every shareholder, including me, we got a rights offer. So for every 16 shares of Reliance, I got one right share. I could either buy that share or I could renounce it to somebody. More about it when we come to rights. That right, that right to sell, buy the share from Reliance, I could sell it. A price was going. See, that price will be nothing but, as the price of Reliance keeps going up or down in the market, there is a calculation based on which this right price also will be determined. See, if I buy the right today, I will get the right to buy the Reliance at a lower price, right? The difference between the lower price and the market price will be the rights. Something broadly like that. So that itself can be bought or sold. That right to buy can be bought or sold. Okay, within a limited period. Once the rights offer is over, you have not sold it, gone. But during the rights period, the rights can be sold. Instead of buying the share, you can simply sell the right and go, which is what I did. See, if I forget the exact numbers, maybe, don't waste your time checking up on the net and correcting me and all, Mr. Hitesh or whoever is doing this correction business, don't bother. It's not very important. Just for number's sake, I'm giving this number. To my knowledge, the offer was 2,220 something, 225, 2225 or something like that. Whereas market was 1225 or something like that. Whereas the market was 144 something, 1,440 something. So the offer was lower than the market price at that time. Therefore, that offer itself, that rights were traded at something like 300 rupees difference. Right. So what I did was I sold the rights, and on the same day, I sold the rights now, and on the same day I bought the share in the market, which means my effective price is how much? 1,400 minus 300 now. So I got a slight benefit there. Very, very small benefit. Okay, chalo. Better than buying the share in the market. Then, of course, we'll talk more about it when I come to rights, shares and all that, more about it. Now, we go on to the definition of once again, let me handle these questions. Some questions I may not answer now. I will answer it later. Okay, sound boosters are there. Yes, saying thank you. Yeah, astrology. I had a passion, and throughout my professional career, I never got the time. During pandemic, I got the time to attend online and learn. So 2 years I was doing this course, and sort of I could complete certain level. Good. Now, thank you for that. Yeah. No, Subham, you don't have to write this slide. Don't copy the slide. No. That one, that expansion, I told you to make a note. That's all. As you might have already got my earlier slides now, like that, this will also come to you at the end of this this topic will be covered over 3 sessions. On the last session, which is on 31st of, I think, 28, 29, 31st. 31st, I will upload this particular PPT in PDF form, right? When you can do. Don't copy anything. Debentures and debenture stock are different. Yes, they are different. Stock is, say, 100 shares combined into one lot becomes a stock. Similarly, stock. For shares, you don't say share stock. You say stocks. So stocks are a bundle of shares becomes stocks. A bundle of debentures. Reason is when volumes are very high, you can trade faster. Instead of trading, say, 1,000 debentures, you will trade, say, one debenture stock is equal to 100 debentures. Then 1,000 debentures will become 10 debenture stock. Like that. So the value will be the same, except that it's now consolidated. But for record, no company in India, to my knowledge, has issued any stocks and all that. To my knowledge, okay. Maybe Tata Group, maybe. Okay, I have not located even one. If you can, great. So anyway, I will tell more about it when we come to share capital also. Yeah. Since you had rights issue in accounts also, later on when we come to the legal part, you shouldn't have a problem. Subham Mishra, what is your question? Do we have to learn this slide, or see, any slide is available to it's based on your syllabus only. It is there in the syllabus I am teaching you. My suggestion, learn it. Just go through it and be there. Seriously, I don't know how to answer this. Yeah. Just be familiar with the definition of securities under the Securities Contracts Regulation Act. Could be. Yeah, ITC also issued rights. Yes, correct. You are absolutely correct. ITC issued rights. Hey, we'll talk about rights issue in detail later on, Baba. Complete detail I will tell you. Don't worry. Beautiful. Now, moving on. Definition of prospectus. Now, the word is not defined in detail. The definition only says prospectus is any document issued or described as such. Prospectus means, suppose it says prospectus or it says offer to the public or prospectus. So described as such. Okay. That's all they say. If they don't give a definition of prospectus. But basically, it includes any notice, circular, advertisement, or other document inviting offer from public. So if I issue a document and say it is prospectus, prospectus. If I describe it as a prospectus, prospectus. Whatever it is, if in that document there is an invitation or there is an inviting of an offer from the public for shares in the company or debentures in the company, that is a prospectus. So it could be a notice, it could be a circular, it could be an advertisement, etc., etc. See, the idea is to cover everything. So no company should be able to make up false advertisement, banner advertisement saying, please subscribe. No way. The rules for prospectus are so tightly defined. They can go for such advertisements. Like LIC went for advertisement, IPO. Before that, a proper prospectus should be filed with the registrar. And this advertisement that you are giving now in Hindu, etc., should very clearly mention such a prospectus can be obtained from the SEBI website, so that any person who wants to deal with you, who wants to acquire the shares in your company, purchase, apply for the shares, can view the prospectus properly, not only your advertisement. So before making any such banner advertisements, first you have to file a proper prospectus in the manner I'm going to describe with the registrar. This is meant to protect the investor. But to my knowledge, I'm sorry to say this, but for finance professionals like you and me, very, very intelligent investors, rarely do people read the prospectus. Rarely, okay, do they read the prospectus. Because it's too boring. It's in small print. Check out prospectus later on. Go online and download a prospectus. You will not read more than one page. Even one page, you will struggle. It will be so small, very complicated, etc. I wonder, no. I wish, but then that's how it is. It's legal. But you can, my suggestion, no, don't attempt to read the prospectus line by line. Rather, scan through it and look at the important parts. For example, does the company have any litigation? The company have any, who are the management, right? Look at the balance sheet, audited balance sheets. Use it. I use it for valuing itself. They give you 5 years information, Baba. For the first time, we are getting this information. Otherwise, you cannot get it from the MCA website very clearly. First time they're giving you. Use it. Read the, and of course, they will give all descriptions about the project and all. Read all that bullshit and see what they are telling could be true or false, right? That is the idea. The idea is to give the investor information which is relevant and authentic, supported by records, not simply some vague statements. So this is in respect of shares and debentures, right? Recently, totally off the topic, don't connect with shares and debentures. For shares and debentures, control is heavy. Today, no company can issue shares and debentures casually. If you do that without following the prospectus rules, straight prison. The rules I'm going to tell you now onwards. If you do not follow, simply issue an ad in the paper saying, please subscribe to the shares of our wonderful company, Tobacco Limited. Like that, if you put it straight away, the promoters, persons named as promoter, director, everybody will go into prison straight away. Okay. So you have to follow the rules. Now, the word prospectus includes red herring prospectus. We will talk about it. Today's class, 100% we will talk about red herring prospectus. What is it, etc., etc. Okay. Similarly, shelf prospectus. So we are going to see 3 types of prospectus. 4 actually. We are going to see later on, we are going to see deemed prospectus, red herring prospectus, abridged prospectus, red herring prospectus, shelf prospectus, deemed prospectus. 4 types of prospectus we are going to see. Right? When I come to 32, 31, etc., I will tell you in detail what it is. Okay. Right now, the definition says prospectus includes red herring prospectus, shelf prospectus, and any notice, circular, advertisement, inviting offer from public. If you say you are issuing a prospectus, it should be in the format prescribed by the government. The date indicated on the prospectus is to be deemed as the date of the prospectus. That date is very important. Prospectus not to be issued unless copy has been filed with the registrar for registration. So if your prospectus date is 6th June, then before 6th June, you should have filed, or on 6th June, you should have filed it with the registrar for registration. Only then you can issue it to the public. If you issue it to the public and then file the prospectus later, sorry, violation. The prospectus is to be signed by every person named therein as a director or proposed director. For example, Mr. A is not a director today. Mr. Shah Rukh Khan will be a director of this company. We are so impressed. We would love Shah Rukh Khan to become if Shah Rukh Khan is a director of the company, I'm eager to invest in that company. But Shah Rukh Khan is not today a director, but his name is mentioned as will become a director of this company, proposed. Then he is also a person named as a proposed director So all the liabilities now I told you will apply to him also. He cannot say, boss, I'm not a director today. Yeah, you are not, but your name is there in the prospectus now. You allowed it now. You permitted it now. Therefore, you are bound. Okay. See, Hitesh Jain is already giving you definition of red herring prospectus and all. One wonders why Hitesh Jain is even attending my class. Seems to know everything. But don't worry. Whatever you don't know, I will try to fill the gaps a little here and there. Chalo ji? But you know what, Hitesh? Don't do this. Why? Because I'm going to talk about red herring prospectus a little later in this lecture. So don't do this. I love you for your knowledge, etc., etc. But don't jump the gun and go where it is not. Other because I will not unnecessarily waste my time talking to you. Don't do this. I'm happy that you know it. I'm extremely delighted that you are well aware of the subject. But, okay. See, the normal student, teacher is always happy. The outliers are always danger for us. Guys who know too much, satisfying them. And guys who keep on asking, repeat. That is another. Okay. Anyway, 30 years teaching, you know, I'd handle all. Only request to Hitesh Jain ji, when I'm saying I am not teaching red herring prospectus, not because I don't know it, but because I will teach it later. Understand? Which type of investor you are? I'm not an animal, sir. I'm a human being. I'm neither a good. But then, if you want me to 100% put a name of an animal there, I'm a bear. As a long-term investor, portfolio investor is always a bear. Why? Because he always looks, that's again not correct, because bears actually push the market down. Okay, that sense I'm not a bear, but I have a bearish tendency. When I see the market falling, I see opportunity for buying, which only bears will do. Bull will panic and run in a falling market. Whereas bear will enter at the time, they further push the market down, take the share. The bear pressure will be there. No? Little bit, I mean, I'm not a bear in that sense because I cannot push the market, but when the market goes down, generally I'm happy because get huge opportunity to invest at very low prices for value shares. So that way, you'll see a bearish tendency in my view. But again, you see, after I buy the share, I need it to go up, right? So I'll also have to become bullish. So, I mean, so anyway, I'm not a... And you know, one more thing, in our Indian market, there is one more animal in this market. You only mentioned bull, bear, and stag. Stag is very related to IPO. These stags are fellows who will invest in the initial public offer. Only they will wait. Once the shares come to their DP account, immediately they will sell it at a profit and run. They are called stag. They are only invest in IPOs. They'll wait because IPO prices will be lower than the market. Once it is listed, their hope is that it will go up. So they will apply. Okay. And then they will again. These are called stag investors. Okay. I'm definitely not a stag. Even when I buy an IPO, I hold. But sometimes you will find bearish tendency. I behave in the same way that bears do. When the market goes down, they buy. Now. I also buy. Anyway. Once again. See, SEBI is different, MCA is different. Registrar comes under the Ministry of Corporate Affairs, right? I'll explain this. It's a good question you're asking. It means before issuing prospectus, SEBI verified first. There's a point there. Not in this topic, but I will explain to you what is SEBI's role in this whole thing. Yes, Himanshu Gupta is asking something about OFS. Humbly requesting OFS questions be reserved for that when the topic is taken up. But to quickly answer your question, which is easy, in OFS, employee come member can also, yeah, then why not? He is not liquidating his share as an employee, Baba. He is liquidating his share as a member. As a member, he has certainly inalienable rights, right? See, you gave him ESOP or you gave him shares. He purchased it. He became owner of the share. Now he is a member. So in two capacities, he is dealing with you. Employee, a capacity. You can, because you are employee, you can say, hey, don't come on. In fact, many key employees, higher level employees will definitely be entertained to participate in the OFS. The management will come and tell them, boss, if you want to sell your share, here's the good opportunity. Either offload the entire amount or, so that is definitely it is possible. But having answered it, humble request, do not ask questions on OFS because I will be dealing with it in detail later. In detail. At that time, you can ask them. Right now, you ask a nice question the way my dear friend Archie Gupta is asking. Sir, please explain proposed director. See, Mr. A is a director. You go to the MCA website, you find that A is a director. Now you read the prospectus, you find A's name is there. Along with that, you find B is also there. Now you go to the MCA website, B is not a director. But in the prospectus, what they are telling, after the IPO, Mr. B will become director. Able to see the future tense here? Will become, proposed. Okay, will become. Okay, so he is not a director at the time of issue of the prospectus, but he is named in the prospectus as a future director. Okay, suppose you don't like the word proposed, use the word future director. He will become director later. But see, why you are mentioning his name in the prospectus? Because he is a big shot. That's why I gave the example of Shah Rukh Khan. Suppose if Shah Rukh Khan will become a director, then Shah Rukh Khan will become, then I will buy these shares. So you are influenced by the fact now. Therefore, such person is also has to sign the prospectus, right? See, stag investors are people who will wait for IPO. They will keep money in the reserve. Once the IPO is announced, immediately they will apply for maximum number of shares. Once the allotment is made to them, their goal is, once the share is listed, their hope is that it will be quoting at a price a little more higher than, far higher than the issue price. They feel that the company has been undervalued by its owner. The management itself has undervalued their hope. They also have a confidence that the market will overvalue this share. So the minute the share get listed, it will get traded now. The price will be more than the IPO price, right? That difference profit, our friend the stag will make. So he's called a stag. Okay. Prospectus is a term, general term. See, the purpose of a prospectus is to provide information to a prospective investor, or in this case, in your example, prospective student. That's why it's called prospectus. So we are trying to give you information about what you can expect if you join the course or if you buy my share. In that sense, prospectus is a common word, but the prospectus mentioned in the Companies Act is totally different from the prospectus you got from ICAI, not after your course registration. If you're intelligent, you should have got the prospectus before registration. The whole point is that you will read the prospectus and then register, because in the prospectus will give you all the information. So you have registered and received a prospectus, you read it. That's all. You already gone now. You become a student. Now what? Many universities have prospectus. That is different from this. Before joining, see, before entering into the contract, before buying the share, you have to read it, and based on that only you will buy the share. Such a document is called prospectus. In the context of educational institutions also, the prospectus gives information about the institution so that the prospective student can make up his mind or her mind whether to join. So usually along with the application for the college itself, you will get your prospectus. You check out any college you go, along with the application form, they will give you a prospectus. You read it about the college, what are the courses offered, blah, 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 fee structure, everything they'll give you. You want to join, join, otherwise don't. Same thing, but for shares. The company is giving you all the information about itself, 5 years financials. Read it. If you like it, buy. But we are not offering. We are only giving you information. You apply for the share, that becomes the offer. Okay. So the idea is to invite applications from the public by giving information about the company. Right. Good. So, as I was telling, SEBI role is something totally different. Till 1991, you had somebody called the controller of capital issues. Public issues were rare. Pricing was not done. Pricing was fixed by the CCA, controller of capital issue. It was a stupid regime. So 91 liberalization, along with that, they enacted the SEBI Act, which is there in your final syllabus. Don't worry. Until then, you can be ignorant. Don't worry. Okay. Point is, what is SEBI? SEBI's role is very different. SEBI is a market watchdog. Okay. Market monitor. SEBI does not give any permission to anybody to make IPO and all. What SEBI does is, they vet the prospectus, VET. They go through the prospectus to see that all the disclosures have been correctly made. If any disclosures are missing, they will say, please make this disclosure. And also more importantly, in the prospectus, they will mention risks. They will statement of risk. What are the risks, risk factors associated with this project or this company? You have to make disclosure. All that will be vetted by SEBI officers. That's all. SEBI will ask you, first of all, in the prospectus, they will ask you to put SEBI is not authorizing the issue of this prospectus. You'll see any prospectus you see, there'll be a statutory declaration. Like smoking is dangerous for health, like that, you'll find statutory declaration in the prospectus. SEBI does not authorize the issue of this prospectus. Okay. Then who is authorizing? Our friend, the registrar. See, the usual method is the company, when it wants to go for an IPO, they will approach a guy called merchant banker. These guys are all big shots. They are investment bankers. They will study the company. They'll do all these things. They'll see how marketable this company shares are to the public. They are knowledgeable about that. Then they'll get back to the company and give a price. They will say, hey, at this price, I can float your company. They'll do them. Then finally they'll arrive. Then the valuation will happen. That is the role of a merchant banker. Then the merchant banker will prepare the prospectus for the company. Okay. Then the merchant banker will take it to SEBI, get it vetted. Pakka. Then SEBI will not give any letter, nothing. Just I have seen it. That's all. Then it will go to the registrar. It is the registrar who registers the prospectus. Once the prospectus is registered, yes, the registrar also is party to the prospectus. So, two levels it will be checked in. One, it will be checked by the SEBI. Then once SEBI is over, it will be taken to SEBI will not give you anything. No, we are not authorizing anything. Simply watching, add, they will make changes, add this, add that. Then it will go to registrar. Registrar will go through the back records of this company, whether it has filed returns, whether creditors are not having any issues are there, all that he will see. Then when he is satisfied, then he will register. Now, that is the registration. He is authorizing the issue of the prospectus. So this is the role of SEBI. So SEBI is not the registrar. Registrar is the registrar of companies. Earlier class I told you, I will be referring to this man as registrar or ROC. He is an employee of the Ministry of Corporate Affairs. Okay, that registrar. Okay. The prospectus can be to be signed. Registrar not to register unless all compliances are over and all persons named in prospectus have filed their consent in writing, including a proposed director. Suppose his name is mentioned as proposed director, he has to say, yes, I hereby give my consent to be named in the prospectus as a proposed director. Unless this consent is given in writing, registrar will not register. Now, who will do all this job? Our friend, the category merchant banker, will do all this job. Okay. It's absolutely correct, Archie. You go back to your Contract Act. If you remember your Contract Act, go back. The prospectus is not an offer. It is only an invitation to make an offer, as you rightly put it. Invitation of offer or invitation for an offer. When the application is filled up by the applicant and signed, then the application is the offer. When the shares are allotted by the board at the board meeting, the offer is accepted. Right? So, very legal point you have made. Absolutely correct. Okay. Absolutely correct. This question Jeevan Hira is asking now, we will deal with it when we come to misstatement in prospectus. It's a good question, very lengthy. I've seen it and I think I understand where he's coming from. When they buy from the secondary market, don't go there now. When we come to misstatement in prospectus, I will specifically tell you about it. Don't worry. Your question is actually a case law. I don't want to go there now. When I come there, Jeevan Hira may not be there in the next class, but try to attend the next class, you will get the answer. Now, the word expert is also very important. See, many information provided in the prospectus would be technical. For example, technology. So, a company is forming a new, see, for example, Reliance Solid Waste Disposal Limited or Solid Waste Management Limited. So, maybe they are introducing a new technology, by which, they can convert plastic into fuel. Incidentally, such a technology is actually available, but maybe they've made it more, cost friendly, and they're able to do it on a mass scale. Right? Agreed. So that is, boss, I am a public, I'm an Aam Aadmi, I don't know anything, boss. So who has to give me an assurance? Not the promoter. Who is the promoter? Maybe an uneducated fellow. But an engineer will give me a report. In that report, they will give the engineer a statement. He will say, yes, by this formula, by this method, it is possible. This company has the method of doing it. Like that. Similarly, valuation of the properties, valuation of the shares in the subsidiary, etc., should be given by a valuer. Whether tax benefits are available, what type of tax benefits, that will be given by a chartered accountant. Also, the financial statements will be signed by a chartered accountant. Compliance with the Companies Act will be certified by Company Secretary. Some cases, cost accountant may also give a certificate. Now, all these people are experts. Any other person who has the power or authority to issue a certificate in pursuance of any law for the time being in force. So, expert has special knowledge in a subject. That is why you are studying to become a chartered accountant. So, you will have a special knowledge in accounting, taxation, finance, and nobody, once a chartered accountant says, nobody can say otherwise, because we are the authority on that subject, in this subject. So, we are experts. So, like that, these are experts. Experts also are liable under the law. If an expert has given a valuation or a report, and if it is factually incorrect, he will also be punishable under the prospectus. Expert not to be engaged or interested in formation, promotion, or management of company. In other words, however highly qualified may be the managing director of the company, he may be IIT, Kharagpur, IIM, Ahmedabad, blah, 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 but he cannot give a certificate as an expert because he's engaged or interested in the formation or promotion. Obviously, now he will be, see, come on, he'll definitely not give the facts. He'll be tempted to, so he should be a totally unconnected third party. Expert has to give his consent in writing before the issue of the prospectus. And the expert should not withdraw the consent until delivery of prospectus for registration. So, of course, after the prospectus is registered, he cannot withdraw. Earlier, that is also possible, before the issue of prospectus. But then, no, he cannot withdraw his consent after it's registered. But till the registration, he has a chance. He can send a letter to the registrar. Because after he gave the report, he might come across some information which makes him change his mind. No problem. So, expert should not withdraw his consent until the delivery. So, consent is very, very important. Consent in writing. If you have a doubt, if you want to ask me a question, before you ask a question, I will put it like this. In writing, okay? Not oral. In fact, this is a very important job. Prospectus should be dated because that date will be the date of issue. Prospectus should be signed. It shall state the information and set out the reports as specified by SEBI. SEBI also has elaborate rules on content of prospectus. So, if you want to become an expert in public issue, etc., you qualify final exam, you will run SEBI also. Then you should be in-depth in SEBI guidelines, in-depth in MCA. Okay, even Companies Act, you are not very thorough. If you want to become a merchant banker, if you want to become a person, reputed guy in IPO, public issue and all that, then you should be in and out in SEBI guidelines. Latest SEBI guidelines should be on your fingertips. Okay? No. So, Companies Act says, look here, you have to comply with my rules. In addition to that, you should also state all the information set out as specified by SEBI. Also, it shall contain a declaration as to compliance with Companies Act. This is something that the Company Secretary will certify. Whether everything in Companies Act has been complied with, and statement as to nothing in contradiction to SCRA and SEBI Act. So all this will be there in the prospectus. So you can see how many enactments are involved in a public issue. Companies Act, what we are now seeing, SEBI guidelines, SCRA, because listing, so there will be something called a listing agreement with the stock exchange. That you have to comply with the conditions of the listing agreement also. Everything should be completed. Your articles of association will be seen by the stock exchange. They may want you to amend your articles so that it is in tune with the rules of the stock exchange. Because sometimes the stock exchange may have specific rules on number of days within which a transfer should be registered, etc., etc. So you have to amend it. So all this work, that is why public issue is a huge activity. And only people who have knowledge, practical experience will be able to do it. Here only we are reading the theory part, just to know what the law is. The important section here that we are now seeing is 26. I'm talking about section 26, right? The prospectus, in case there are any experts, should state that the consent of expert has been obtained. It should also be enclosed along with the registration, prospectus or registration. Consent of everybody should be enclosed. Do you remember? Everybody's consent should be given. Expert also should be given. Everything should go to the registrar. And of course, SEBI also. See, SEBI will see everything, but they will only touch it and give. That's all. They will simply touch. See, normally in our South Indian marriages, before the marriage, that Mangalya Dharan, that Mangal Sutra will be sent to everybody in the hall, and we will only touch it. That's all. So, sort of, I'm also here. I've seen this like that. But the point here is they are not liable. Tomorrow something goes wrong, don't come to me. SEBI will very clearly tell. It should also state that the prospectus has been delivered for registration. It should be stated on the cover page. Idea is, suppose somebody wants to see the prospectus copy, they can go to the registrar, Ministry of Corporate Affairs, and get it. Of course, SEBI has a very beautiful site where any IPO you can go and download. The stock exchanges also have the NSE and BSE. NSE especially. One thing, when I'm teaching prospectus, definitely there will be some terms, etc., which I'm using, which are new. Some of these terms will be in detail explained in share capital. So permit me to go there and at that time explain. See, your question is very interesting. These experts should not be previously associated with the company. There is actually no such prohibition. For example, an ex-employee, whether he can give, he can. At the time of issue of the prospectus, he should not be engaged or interested in the formation, promotion, or management. So, earlier association, they are not technically prohibiting. Past employee, past director, etc. They are not actually prohibiting. Okay, this is my view based on your question. Very interesting question, Mr. Jain, but Prabhas Jain. So, but answer seems to be no. Even there's nothing. At the time of issue of the prospectus, he should not be engaged or interested in the formation, promotion, or management of a company. Check out. Maybe this is my view. Check out. Because I know you are a very intelligent person, Prabhas. So in case you got anything to the contrary, please do share with me. It will also state all the documents which are attached to that prospectus should be on the cover page of the prospectus. Yeah, Priyanshji, expert can withdraw the consent until the delivery of prospectus for registration. So till that time he can. Baad mein, if he withdraws consent also, legally he is bound. His liability cannot be avoided. Okay. So maximum, see, you are the expert, you are given a certificate. Now, 2 days later, you discover that there is some mistake. Now you want to withdraw, you can, provided the prospectus has not been registered or delivered for registration. So you have to be careful. So that is the limit. After that, you can withdraw some sort of a proof. See, tomorrow you can go and beg, but you can always say, boss, at the time I was also, but then later on I came to know I withdrew. But legally you are still liable under the prospectus. But before the delivery, if you have withdrawn, then as an expert, you are not liable if there is any misstatement. Of course, If an expert is withdrawing his consent before registration, that IPO is gone. That is enough. That IPO is gone. It will be public information and news will cover it, blah, blah, blah. You will become very, very popular chartered accountant. The company's IPO will go. After that, in this country, nobody will appoint you as auditor or expert. That is there. So be careful. The idea is simple. If you have the slightest doubt, don't give your consent or report. But if you still want to withdraw genuinely, till the delivery of prospectus, yes, you can. After that, even if you withdraw, legally you are bound. Okay. So this is section 26 broadly on prospectus, right? Now, these are two exceptions to section 26. 26 says prospectus should follow certain norms, etc., etc. Two exceptions. Issue of prospectus form of application to existing members, whether with a right to renounce or not. In other words, when you are making a rights offer to the existing members or debenture holders, already they are members or debenture holders, to them you are giving a rights offer. Maybe they already have a built-in right as per contract, or you are now making a issue but not going to the public. Like Reliance did not, it never went to the public. It simply went to the members. No, without right to renounce also it's okay. And existing members. In those cases, the rules relating to prospectus will not apply. Okay. Reason, you will get into SEBI. MCA, you will no longer be concerned because his elder brother SEBI is your boss now. SEBI has got guidelines for it. Don't worry. If you want to make a rights offer, SEBI has separate guidelines for rights offer. There you have to comply because now you are a listed company now. Once you are a listed company, you have to comply with SEBI. If you are not a listed company, why am I bothering you? You do whatever you want. So long as you are not going to the public offer to your existing shareholders, you are making, we have no problem. Go ahead and do it. Okay, no problem. If you are a listed company, be careful because I am not controlling, but SEBI will control you. Similarly, if you are already a listed company and you are issuing shares which are or to be in all respects uniform with the existing shares being quoted or dealt with on a recognized stock exchange or RSC. Existing, it's a listed company, already existing shares. In other words, this is nothing but further public offer, FPO, further public offer. So section 26 will not apply. I repeat, you are a listed company, you are going for FPO. Section 26 will not apply to you. But don't worry, SEBI's rules, guidelines are there for it. You will have to comply with that. You can simply make an FPO and run away. SEBI guideline is there, which is similar. But under the Companies Act, they are exempting you. They are saying, hey, you are now gone, we are big man, yeah. You go here, why talk to me? You go and talk to SEBI and finish it. Okay. First time, IPO, then you have to register with the registrar, Ministry of Corporate Affairs. Okay. I'm sure some of you may not have understood the exception. If so, let me wait. Yeah, later on, if you want me to repeat it, because I find that many students, second exception, they don't understand. See, already existing listed company, going for FPO, section 26 will not apply. Rules of prospectus will not apply. That's all. But just for your information, it is not that they can go naked, they can run around. No. They are controlled by SEBI now. SEBI will control them. Okay, that's all. Once they get listed, their top notch will be with SEBI, stock exchange and all. They'll get more controlled after that. Every day, SEBI will be watching them. Every day, that stock exchange management will be watching them. So MCA will take a backside and say, do whatever. Now you are a big boy. You're going to the big league. They will catch you. Don't worry. Like that, they leave you. That's all. But so unlisted company cannot go for FPO, IPO, Baba. But unlisted company which is issuing rights shares to the existing members, no problem. Go ahead and do it. We have no prospectus won't apply to you. That's all. Okay. Got it? To my knowledge, I have made you understand, but it's still not clear. You can say repeat. I will repeat. Prabhas, that's why I asked you to verify and tell me. If that is so, then past is also covered. I will correct. we'll have a small break at 7:30 as usual. This time I want to give a break because aaj Shanivar hai na, so let's not close it fast and all. Let's have a small break. Then I'll go till 8:30. At that time I will check up and come back. I'm sure you are right because I'm very happy that you have gone to the barracks. Okay, I will check up. If that is so, then we will accordingly understand the topic. Thank you for that input. That's why I specifically told you, because Prabhas Jain will not ask you a question unless some background is there for it. Yeah, I'm sure you're right. It's not and has not been engaged or interested in the formation. Again, see, please understand. Let me go there and then I will answer. See what has happened now. In my eagerness to simplify that section, I have not given it verbatim. But I will explain to you what that section means. At that time, anyway, I will, if necessary, I will correct this slide itself so that, such a doubt will never rise in the mind of a student again. Exertions again. Kanna, Mr. Surya, this is the last time I will explain this. Listen carefully. You are not a listed company or you are a listed company. Doesn't matter. You are issuing prospectus or application forms to existing members, not public. Existing member, existing debenture holder. Already he is a member of your company, already debenture holder. You are giving him right share. Existing members, you are giving right share. They may have the right to renounce or not, no problem. That part you don't understand, don't worry. I'll explain when you come to share capital. Point is, you are giving shares to the existing members or to the debenture holders, you are giving shares or new debentures based on right. So if you hold 10 shares in my company, I'll give you 2 shares. If you hold 50 debentures in my company, I'll give you 5. In those cases, when you are issuing a prospectus or a letter to the existing members or debenture holders, whether there's a right to renounce or not, the rule relating to prospectus under section 26 will not apply. Section 26 will not apply. This is an exception. But practically what happens? Suppose you are an unlisted company, you are giving right shares to the own shareholder, existing shareholder debenture. There is no need to control that transaction because they are existing members, Baba. They are getting so much information about the company. So it's no problem. So a listed company and you're making a rights offer, don't worry, MCA will leave you. 26 won't apply, but SEBI guideline will apply. That's all. So if you have not understood still, Surya, only one person now can explain. Allah hai Malik. Okay. But if you understood, I will. If after this also people have not understood the exception, I suggest let us bother not about that's limit of Srikanth's ability to explain to Surya. Okay. It's my fault. Okay. But if you have understood it now, please confirm that you have. Second exception. You are a listed company. Your shares are being quoted or dealt with on a recognized stock exchange. You are now issuing prospectus for shares or debentures which are to be in all respects uniform with the existing shares. Already quoted shares, already quoted debentures on a stock exchange. You are issuing a FPO, further public offer, to the public. Now, in that situation also, Section 26 will not apply. Means you don't have to register with the registrar. But again, SEBI has clear-cut guidelines for such issues also. You have to comply with that. Why? Because you are a listed company, Baba, you will come under SEBI also. SEBI also. Please underline the word also. MCA will control you. So in this case, MCA is telling, Baba, you are a listed company, existing shares, quoted on the stock exchange. These new shares are similar to them, in all respects uniform. Bob, don't come here, Babri. You go there, talk to SEBI and finish your matter. SEBI will control. So they say, this section will not apply. Yeah, I've explained it, yeah. If you still don't understand, what can I do, yeah? You please confirm that you have understood. Huh? But you know what? This is one area where students either they don't understand or I'm unable to explain this part. See, this is the third time I'm taking this topic in this online lecture. Like 2 times, after I taught this, repeat, sir. So this, if I keep on repeating, we can't go to the next topic. What do you say? Now onwards, if you want to have any doubt, specific doubt you ask, I will answer. And Surya ji, I have explained it once more. If you have not understood, leave it. If you have understood it, confirm that you have understood it. If you have not understood, chalo, God only can help you. I mean, or maybe some better teacher than me can help you, not me. Okay. Again, this KK, I'm not able to understand. Many of these, all you millennials and some old people also who are trying to act like Generation Z and all, they put OKK. One lady, she keeps on sending messages. OKK. KK, okay. Okay. Something like that. Huh? It's a way of saying, okay, I have understood like that. Huh? I don't know. Because, you see, I don't know. Sometimes, in this, when you're dealing in a written mode of communication, there's no tonal variety there, right? See, when you're talking, okay, I have understood. The tonal variety is there. But in the written mode, when you put KK, what is it? Seriously, I'm a Buddha, that already white. So I'm a Generation Y guy, so nearing 60. Seriously, not able to understand OKK. Many people use it. Even my generation people. This lady is elder to me by 2 years. She's an OKK Srikant like that. I know OKK. Okay. Once okay, you put OKK. Anyway, OKK. Sorry, becoming old. Huh? Boss, I explained to you, Vyas. Just now I explained completely. Second point in Prospectus, point of, sir, recognized stock exchange. I have given abbreviation, sir, RSC. That's all. Recognized stock exchange. These shares are quoted on a recognized stock exchange. They are already being quoted. Some more shares are being issued, which are uniform. The rights, everything is the same. Further, public offer. They are quoted on recognized stock exchange, RSC. So there the MCA says, this section will not apply. It's an exception, ma. This section won't apply. That's all, end of story. This section won't apply for a FPO. I'm only adding this point for your intelligence, for your own knowledge. I'm saying, even though MCA is not bothered, MCA is exempting you, SEBI will catch you. All listed companies come directly under the purview of SEBI. That is more for your general knowledge purpose I'm telling. If you are not able to understand, if you are able to understand this, it's enough, don't worry. Huh? Listed company, shares are quoted, the new shares are in uniform with the other shares, then section 26 won't apply. Existing company issuing shares to its own existing members and debentures, whether right to renounce or not, section 26 won't apply. That's all. Okay. Everybody is putting. Surya is putting many times. I don't know why he is putting. Okay. Because see, the beauty is this particular section. You are not the first. You are not the first batch. Right from the first batch. When I come to 26.2 itself, I'll be very worried. How many people will understand like that? Anyway, no problem. Why are you putting so many times, Surya ji? Getting angry with me or what? No problem. So long as you have understood, I'm happy. Because you should understand. Not just casually, but well. Okay. See, earlier law was very logical and written by people who knew English. The current law is drafted by people who are, sorry to say, not logical. There are so many places where they're illogical, coupled with an inability to, I'm sorry to say this, handle the English language. Okay. It becomes real pain. There are so many sections where grammatically wrong, meaning will change now. Any language, when you don't follow the grammatical rule, meaning will change. And that happens here. And then it becomes a problem. Yes, Mahadev Bharadwaj, once a company is listed, it has to comply with both Companies Act, means, and also SEBI. As a company, it has to comply with Companies Act. As a listed company, it has to comply with SEBI rules, SEBI guidelines. Okay, so double, right? Still, nobody is explaining what is the meaning of OKK. Seriously, I would like to know. If I know the meaning now, I will also start using it now. OKK, like that. Because many people are using. I'm getting that message like that, especially girls and ladies. OKK Srikant, like that. What is that OKK? I don't know. KK. Seriously, I want to know. I'm not trying to knowledge seeking. Anybody can explain. What is that? Why OKK? Why not only OK? Or why KK? Or I think blindly I should start adopting the Gen Z ka language. KK. Wonderful. Pooja PS saying what? Prospectus is important only for IPO. Exactly. You got it. Absolutely correct, Poojaji. That's exactly. Right shares can be issued. Right shares can be issued only to existing shareholder. Later on, I'll tell you, right shares should be issued to only existing. It is both a right. They are entitled. We'll see that later. I understood. Okay. Double okay. I will also start using. Okay. That is, especially somehow, I get that feeling that I'm irritating that person. When they put okay, I feel maybe the way I'm putting it, they are irritated with me. Okay. So when they put okay, I feel very bad. I have hurt them like that. Anyway. Good. Wonderful. Moving on. Please understand, there is a date of registration. The date on which it is registered with the registrar. The date of issue or the date mentioned in the prospectus should be after the registration or on the date of registration. Right? So, I will register the prospectus. Once I register it, how long is it valid? Validity period of a prospectus. No prospectus shall be valid if it is issued more than 90 days after the date on which a copy thereof is delivered to the registrar under section 26(4). So this is something you might want to remember. Validity of the prospectus is 90 days after the date on which a copy of the prospectus has been delivered to the registrar for registration. Let me sort of make it really relevant because this is important. This could be a problem, or this could be a multiple choice question, or they could give you dates. So important point is date of registration. Date of the prospectus should be after the date of registration because date of the prospectus will deem to be the date of issue. Right? Then it should be issued within 90 days. The idea is simple. Information also has an expiry date, right? Information has an expiry date. So this prospectus is based on information available. Now, once you get it up registered with the registrar, you can't keep it in pickles all forever and ever and use it for 1 year. No, 90 days because information might change, the environment might change, the industry might change, something could happen. Therefore, they say 90 days from the registration you issue. If not, what to do? So that prospectus, you throw it and you prepare fresh prospectus, go through the same procedure so that it will be again seen whether it is still relevant and then you issue it. So life of the prospectus is 90 days. Okay, no problem. You please continue. You're all Gen Z. In fact, they are continuously teaching, senior people in many corporate training I do now, they keep on saying, Mr. Srikanth, please train our senior employees to understand Gen Z. So whenever I go for corporate training, they say, Mr. Srikanth, about 20 minutes, half an hour you spend helping them to understand Gen Z. That is you. You're all Gen Y, I think. Children who little younger than you will be Gen Z. Some of you could be Gen Z also. Generation Z. We are Generation Y. Okay. And in between there is one Generation Y. Some of you could be Generation Y also. Earlier they were trying to say Generation Y, I think millennials, you are pre-millennial, millennial, etc. Now the point is, think about it. Generation Y is still in control. 40 plus, 45 to 60. We are still in control. Who should understand who? Think about it. But still we are taking the effort to understand. Why? Because tomorrow you will inherit the legacy that our generation is creating. Your generation will inherit it. So we want you to be aware of what you are inheriting. Okay? So there is no big deal in changing to become you. But there's a lot of advantage if you change to become us. Because we are financially successful people. We are academically successful people. We have done something already. Think who has to change now? We have to change to become you, or you have to change to become us. Just don't get angry. Think on it. You will understand what I'm saying. Of course, some of the language we are using may be very old-fashioned, blah, blah. But the attitudes that we had are ageless. Whether I'm 56 or whether I'm 25, the Srikanth was there at 21 when he became a chartered accountant. In 1987, I became a member of our institute at the age of 21. That Srikanth is still there. Okay, of course, he's old. He's not as active as he was before. But that Srikanth is still there. That attitude is something, it is across generations. Only people who have that attitude will succeed. Changing language, changing the way we speak, okay. But attitude, the same attitude if you have, then automatically you will succeed. I'm not telling this to waste your time, but to tell you. So, of course. So sometimes when the old people try to learn the millennial language, I'll be surprised. Why are you wasting your time? Yeah, your time is getting over. They have to learn your language. That is their luck. Let us go away. That courage is not there. Am I correct or not? See, we have got knowledge. In those days, the gurus, they were very senior people. They sat in the ashram. The students went there and the guru was ready to teach, but guru did not try to understand the student. Why should I? Why? I'm not an entertainer. I'm a teacher. Okay, is the point. This is a thought I'm sharing with you. Don't get angry with me, but just to get. Okay. And one more thing, remember, you are 22 now, or 21, or 19. You will also become 50. Okay, age will come. Generation new will come. So that is life. But with all this change, there are certain changeless attitudes that successful people have. Whatever generation they might be, the successful attitudes will never change. They will always be the same. The total confidence in self, never depending on external environment, not blaming other people for our failures. These are all attitudes that we carry across generations. Any generation, if you see successful people, they would have this attitude and they would have succeeded. Fellows who are keeping on complaining, blah, 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 any generation, he will not succeed. I will also start using okay. If it has no sarcasm, then no problem. I'll use okay. And I see for me what it's like wearing a shirt now. I will change my shirt. I will change my language. Language can be changed. Again, I'm repeating, even at the cost of boring you or wasting your time. Attitudes are ageless. The right attitudes have no generation. Every generation has to have the same attitude. No change. Gen Z, Gen Y, Gen X, my grandfather, my great-grandfather. Success comes only with the right attitude. Otherwise gone. Chalo, let's leave that point. 90 days is very important. Let's see if any questions are there on that point. Isn't right according to English. This means okay. Chalo, no problem. No issues, no issues. I'm happy that you clarified it. I will use, from now on, I will also use OKK. That's all. I don't know if I can. Valid equality issued within 90 days of delivery to, see when the date of not delivery to register, the registrar, see, you will give the prospectus for registration, that is delivery. From that date, within 90 days, you have to issue it. Okay. Yes, date of delivery and date of registration may be slightly different. Slightly different. This means the registration may happen a little bit later. Also, it is quite possible that the registrar may refuse to register. I have once or twice they have done it. Rarely, but they may refuse to register. But rarely once or twice they have done it. If registrar registers after 90 days, then technically yes, because you have delivered it 90 days over. Maybe there is some problem. If 90 days he has not registered it, chances are he will not register it. He will not register. 90 days is too long. Usually, see, I used to be engaged in this activity where I was see, just as I qualified as a company secretary, since I was an expert in company law, many of these category 1 merchant bankers, they used to hire me. I was a practicing chartered accountant. I am a practicing chartered accountant, but because of my knowledge of company law, they used to hire me for verifying the prospectus with respect to company law and going to the registrar and getting the prospectus registered. So I used to do that job for a fee. So why I'm saying now, usually it will be 3 days, maximum 3 days from the date of delivery, 48 hours to 72 hours maximum. If it is not done within 72 hours, gone. That means it may not be registered also. "90 days will start after registration by ROC or just after the date of sending copy because the prospectus may not be registered." Yes, it may not be registered, in which case there is no question of issuing the prospectus. Unless it is registered, you cannot issue, right? So this is between 90 days after the date on which a copy is delivered to the registrar, you have to issue it. So the registrar may take some 2 or 3 days to register. If he doesn't register within 90 days, gone. Can alterations be made to the prospectus at a later point in time? No, sir. You have to prepare a fresh prospectus, again deliver it for registration and come. Any change, there's no question of changing or alteration of the prospectus because, see, the issue is simple. You get it approved by SEBI in principle, take it to the registrar, get it filed for registration, get it registered, issue. Then it goes to the public. Thereafter, no question of changing, no issue of advertisement now. You simply have to withdraw that prospectus, again file a fresh prospectus for registration, go through that process. Which is why the merchant banker will take a lot of effort to ensure he will be stricter than the ROC and SEBI because he cannot alter it. Just you have to, once you file, again you have to withdraw the prospectus, go for fresh prospectus for a small change, very difficult. See, if he rejects it, gone, sir. If the registrar does not register, just have to come. Nothing. After that, this document is not. Obviously, he is a government officer. He can't simply reject. He can't say, I don't register. He'll give a reasoning. What they will do is, they will say, hey, this prospectus has got this mistake, correct it. That process only will take 48 hours to 72 hours. See, you also don't know the reality now. The practical, I know. They will not take more than 72. See, first day you go, he will say, I'm busy, go. Second day you go, he will say, hey, this is wrong, that is wrong, that is wrong. By evening, I'll correct it and give it to him. That time I can correct it. I'll correct it and give it to him, if at all. Or if I want to convince him, I'll convince him and say, sir, this is how it is. Please kindly understand what it is. Then, okay, chalo, it is done. Then you register. Suppose he is giving you a change that you don't want to execute. You will say, if you don't execute, I will not register. That's all. That is whose fault is that? Who is a merchant banker? Merchant banker is a person who will he will advise the company on the public issue. He will help the company to issue the prospectus. More than that, he will market the issue and he will see to it that subscriptions are received from the public. So there are a lot of big merchant bankers in India. You can go to the SEBI website, you will find merchant bankers list is there, registered. They will be registered with SEBI, etc. And so they are people with a lot of financial knowledge. They will advise the company right from pricing to issue of prospectus to marketing the issue. So they will also prepare what is known as a road show. So then they'll take the promoters on a road show to various investors aware, and then they will fix the brokers. They will see to it that the public issue is oversubscribed. So that is their job. For this, they will get a commission, like some percentage of the issue size, they will negotiate, which is also fixed by SEBI, and they will get it. Why? How 12th April is coming here, Mr. Ankur Patel? I deliver prospectus to register on 1st April. Registration is done by 15. 90 days will start from 1st April. But what is this 12th April? Okay, that is not able, not. It should be either 1 or 15, right? What is 12? Maybe it's some typo, is it? No problem. But anyway, the answer is 1. Chalo. If you do not comply with section 26, right, then there is a punishment. Means contravention of 26 is anything, right from not complying with the content, not getting consent of expert, or anything where you are not complying with this provision, or more importantly, not giving the prospectus for registration, but issuing the prospectus. Such things. They catch hold of that, they will. It's a contravention of section 26. So the company has to pay a fine of 50,000 rupees up to 3 lakhs. Any person knowingly a party to issue of prospectus, this could be anybody, the promoter, director, proposed director, expert, any person knowingly a party to issue a prospectus, fine of 50,000 rupees up to 3 lakhs. Imprisonment was there. Now, with effect from 21/12/2020, punishment by way of imprisonment is not there. Maybe I earlier said that they'll be put in prison. I take it back. Now that the provision relating to prison imprisonment has been removed, it is currently not in the Act. Okay. Now, the time is something like 7:40, you can say 7:40. So, till 7:50, we will have a small break, 10 minutes ka break. Then we'll go on till 8:30. Okay, we'll go on till 8:30. Welcome back from a well-deserved break. Moving on. Again, I am using a word that is going to be fully described in share capital. Okay. Dematerialized form. There are two types of formats, shares for shares. One is physical form. The other is dematerialized. Once it gets into dematerialized form, it becomes an electronic record. Okay. So dematerialization is conversion of physical shares into electronic records in the records of something called depository. That's all. The reason for dematerialization was up to 1995, even listed companies were using physical share certificate, physical paper card. So what happened now, when I buy the share, that share will have to be delivered. Means physically delivery has to come to the broker, the seller's broker, then he will give delivery to me, my broker will give delivery to me. A huge time. But minimum it will take 4 to 5 days for delivery to come to me. Okay. Again, if I want to sell, what I should do? I should sell. Then within 48 hours, I have to give delivery of the script. So we call it script. So it's all tedious. And sometimes, if the sign is not tallying, stamp is not there, rejection. The company will reject the transfer and all. It's a big mess. Therefore, in order to save time and money and energy and to make things fast, they said, convert all the physical shares into fungible form or electronic form or digital. Okay, this law was enacted in 1996 called Depositories Act, right? Made it compulsory. So there was a lot of, as usual, like Mr. Raghavan is saying, like Buddhas like me were always fighting against progress. So they were telling, no. But I didn't. When this concept came in 92, along with SEBI, dematerialization also came. I liked it because it has given so much benefit to the investors. Today, buying a share, I just have to phone my broker. I go online, just check, the share will get. That next day or almost that day evening, the share will be credited. Like money is credited in my bank account, the share will be credited in my demat account. Okay. So, if you want to sell it, I simply have to sell it. That's all. So easy. Therefore, so for a long time, physical shares were also used. Dematerialized was also there. Then finally, SEBI told, if you want to make a public offer, then the shares should be only in dematerialized forms. So if you are a listed company ka share, if you want to trade in the stock exchange, it should be only in dematerialized form. Otherwise, you cannot sell it, period. Okay. Other companies, unlisted companies, or companies which are not making a public offer, they can have both physical form and dematerialized form. They have an option. But if you want to go for a public offer, if you want to make an IPO, or if you are already a listed company, then if you want the share, all the shares should be dematerialized. But what could happen is some donkeys will not surrender their physical shares. In those cases, simply keep quiet. Later on, when they come, they cannot sell it. Why? Because to sell that share, you have to go to the market. There, you cannot give physical delivery. You have to give only digital, online transfer. So they have to convert it first into dematerialized form, and then only it has to become, it will be so. So at the time of public offer, see, this is for existing listed companies. Suppose new companies coming after the Depositories Act, any new company, straight away, it will be only dematerialized form, no physical certificates. Some of the old companies are there which still have some old physical certificate. Some people are there. In fact, I have a client whose father is holding shares from 1930s, very big company in Chennai, tire company in Chennai, huge, having only 32 shares, but physical form. Today, it's becoming a real pain. There's a lot of issues. When you come to dividend, I'll tell you more about this. Because due to many reasons, he has to make some application. It has to be then converted into dematerialized form. Only then he can give delivery. Of course, the company will, once his ownership is proved, the company will give delivery in dematerialized form. They will credit the DP account. That's not so. All shares of public company, listed companies are dematerialized. Other companies, whether public or private, which are not listed, which are not made a public offer, may issue securities either in physical form or dematerialized form, right? Still, if you have not understood dematerialization, which is quite possible, don't worry. I will teach when I come to share capital. In detail, I'll teach how to dematerialize, how to convert physical into dematerialized form, everything. Now, promoters making public offer of convertible securities should hold it in dematerialized form. Means convertible security means suppose a debenture can be converted into shares. The debenture has an option for conversion. Later on, we'll see convertible debentures. Similarly, preference shares may be having option to convert into equity shares. Such convertible securities like convertible debentures, convertible preference shares should also be held in dematerialized form. Promoters making the public offer of convertible securities should hold it in dematerialized. Any securities held earlier to be converted into dematerialized form before the date of offer. Okay. How to do that is a separate topic. How to convert physical shares into dematerialized shares. What is dematerialization? Who is a depository? What are the two important depositories in India? Etc. will be taught when you come to share capital. I will teach in detail. Don't worry. Now, aaj ka class, maximum I'm going to try to complete shelf and up to abridged I want to complete today, if possible deemed also. Anyway, in the meantime, before we get into types of prospectus, let's see any questions. Whether merchant bankers and underwriters are one and the same? No. Alag alag. Underwriter's job is different. We will see it when we come to share capital. Underwriter ka job is in case the issue is not fully subscribed, he has to take if he is underwriting, to the extent of his underwriting, he has to take it. That is his job, for which he will be paid an underwriting commission. Different. But merchant banker is different. He is a professional. He is not a broker. Okay. Underwriters are basically brokers. They will be registered brokers in the stock exchange. They will also act as brokers. You see, in the public issue, their job is to promote the issue. They will sell the public issue to their customers. They will say, buy the share. They give the application, they'll get. So they will get two commissions. One is broking commission. Any shares which are purchased through them, they'll get broking commission. For example, your DP would be getting that commission. If you are having your shares in a depository participant DP account and you are going through the DP, then he will get that commission. What happens is the DP, they will be having a trading guy also. The trading wala will call you and ask, sir, are you applying? Now what they have done now, even that they have closed that opportunity. Today you can go directly to your bank. Through the bank, you can directly apply to the public issue. No broker between you and your maker. Nothing. Straight away today. You go to your bank itself will have IPO option. Go there, click, make the payment, come. That's all. LIC option, LIC like that only if you apply. But your bank should have that facility. Otherwise, you have to go to the company's website, make the payment online, close. Today, you don't need a broker at all. But suppose you are using, your broker also will have. He will ask, come and apply through me, because then what will happen? He will get commission. Okay. So that is how it is. Underwriter. Merchant banker is bada admi. That fellow will control everybody. He will appoint the underwriter. He will appoint the brokers. He will negotiate terms on behalf of the company. He will advise the company on everything, right from pricing to, preparing the prospectus. Everything he will do. Till the issue is subscribed fully or oversubscribed, his job. Once it is oversubscribed, he will have a celebration party and go away. He will be paid a commission, huge amount, enjoy. That's all. So once you finish your CA, one of the career opportunities you could have could be to become a investment banker, not merchant banker. They call it investment banker. One job they do is merchant banking. In those days, in London, there were people who were helping the merchants to raise money from the public. They were called merchant bankers. So their job was to help the merchants, traders, especially people who in those days in England, equipping a ship and buying the cargo and loading it. That's it. You go one journey, you go and come, you become millionaire. Yeah, in those days. Risk was there. You had to cross the Cape of Horn. You had to go to the East Indies. You had to go to the West Indies. You could die. But you go one journey, come back. You go to the East Indies or the West Indies or China. That's it. You are rich. So even for making that ship, you need money. So the merchant bankers used to do this. They will promote the thing. Then they will have their own customers, who rich people who would have given money to the merchant banker to manage. So that merchant banker will tell them, boss, this public issue is good. Shall I invest in this company? Sir Richard Armstrong is going to China. Would you like to invest? Yeah, why not? If you say so, my dear friend, he'll sign. Then that money will be invested in Armstrong's company. China, money will come. The ship comes back laden with silk and tea. It goes with opium, of course, from India on the way. But the point here is, once the ship comes back, Armstrong will be very rich and his shareholders also will be very rich. They'll declare a dividend. See, this is how it worked in England in those days. So at that time, the guys who helped these people, the merchants, to raise money were called merchant bankers. That's why you still have that name, merchant banker. Though today, a more appropriate name would be calling them investment banker. They're called investment bankers, right? It's a wonderful career for a chartered accountant, but then you need we can call it as like for medical profession you have now. MBBS is just the beginning, yeah. Once you finish your CA, it's like not MBBS. Okay, CA is MD. CA is MD. You're already expert. Beyond that, super specialties are there. So that super specialty is what we're talking about. Investment banking is a super specialty. You have to go beyond. You have to be really knowledgeable. 100%. Mere CA may not be enough. You may have to do an MBA and then move on. Strategy. Super specialty. Okay. But as any super specialty, it's very, very lucrative. So let us see any questions before I move on. Who is a merchant banker? I've told you. I hope I've explained in detail. When I deliver prospectus register, I already answered. Whether merchant, no, they are not. Sir, whether the registered present contain any term denoting that it's registered? Yes. On the cover of the prospectus, you will mention, shall state that prospectus has been delivered on cover page. Okay. It will state. Section 26 has to state. Okay. But now, stocks are in digital form. Absolutely correct. How it's happening and all, we'll see later. If computers to open Demat account for every shareholder. Yes. Compulsory to open for, yeah. If you want to hold shares, Baba, you should have a DP account. Because in a listed company, physical shares, no. You have to have a DP account. First step, you have to open a DP account to get the share. Okay. So like that. Yeah, in my suggestion, if you're a CA student, then it's high time you open a DP account for yourself. It won't cost you much. It's good to have. You can do it online. In private placement, can they issue physically? Private placement, yes, because see, other company, only listed companies, every company making public offer. Other companies which are not making public offer, like private placement, can be in physical form. Absolutely correct. On DP account, what will be status showing? See, in the DP account, you will be holding the convertible debentures as debentures. When you go through your DP account statement, you will find separately they have listing debenture, share, government security, like that. So there it will come under debentures. Once it is converted, that day, that account will be closed and automatically shares will be credited in your account. So beautiful. You don't have to do anything. Once the board of directors issues the resolution is passed, they inform the stock exchange, they inform the depository, that's all. It will be transferred. Simple. The convertible debenture account will close, the share account will get credited. Yes, I think I've answered your queries. Okay, one query still remains unanswered, which is the question on whether whether there is past involvement or engagement with the company, right? Raised by Mr. Prabhas Jain, who has quoted the BAR Act for us. I thank him. I couldn't refer to the BAR Act. I wouldn't mind. See, as usual, I want till 31st, not tomorrow, or maybe tomorrow I will answer. Tomorrow morning, for your information, tomorrow morning we have a class. Tomorrow morning we have a class. Change, it will be 7 to 9:30 tomorrow morning. I'm sure you are aware, it's there in the timetable. Possibly at that time I will explain to you, my dear friend. And explain means I'll just talk about it. Maybe you could be right. Okay, so wonderful. Thank you, sir. I would like to explain, but problem is, I like to explain, not a problem. And thank you very much. South people always seen courage and okay. Thank you for, on behalf of all South people, I thank you, which includes 4 states. On behalf of Andhra Pradesh, on behalf of Kerala, on behalf of Karnataka, and of course, on behalf of Tamil Nadu, I accept their compliments. Good. Moving on. So there are 4 types of prospectus, which is shelf prospectus, red herring prospectus, abridged prospectus, and deemed prospectus. First, let us see shelf prospectus. Now, one of the important questions that you asked me was, sir, you are telling 90 days is the validity of prospectus. What happens if I want to make changes, etc.? Should I do again? So what they said, okay. There are certain issues like debentures. You see, the company can approve the issue of debentures, but they may not issue the entire debentures in one shot. They may be issuing it over 1 year in series of debentures, right? In those cases, what they say, it is enough if you issue one prospectus. Thereafter, you don't have to issue. Let us say that you are going to issue 1 crore worth of debentures, 1 crore worth in 4 tranches, 4 installments. 25 lakh, 25 lakh, 25 lakh, 25 lakh, 4 25 lakhs over from 22 April to 23 March, 1 year. So what they say, and this is applicable only for debentures and bonds and all, where you're issuing them in a series. So a prospectus in respect of which the security of or class of security included therein are issued for one subscription in 1 or more issues over a certain period without the issue of a further prospectus. So when I'm issuing the series of debentures, I will deliver only 1 prospectus for registration, wherein I will say, I'm proposing to issue 1 crore totally. Right now, I'm coming only with 10 lakhs. That's all. Then every time, I'm sorry, right now 25 lakhs. Then every time I issue further 25, 25, 25, I will not issue further prospectus. So that is why it is called shelf prospectus. What happens? I issue the prospectus once, then it is on the shelf. Anybody who wants to look can go anytime and look. So for shelf prospectus, there is no 90-day condition. You can make. But one problem is there. The problem is still there. What is that? What? See, why we had 90 days limit? Because things can change in the meantime. The financial position of the company can change. The environment can change. Some material changes can happen. So what happens if I issue a shelf prospectus and then I make the first series? Then by the time I make the second series, say 4 months later, some changes have happened. What happens? That we will see. Basically, shelf prospectus is very convenient when a company regularly makes issue of securities, especially debentures. See, mainly you will find only debentures are issued in this way. In fact, they are called series of debentures. For example, 7% debentures, series 1, series 2, like that I may issue 5 series. So every time I issue a new series, I will not publish a fresh prospectus. The original prospectus called shelf prospectus is enough. If it issues a shelf prospectus, it need not issue a fresh prospectus for every time a new series is issued. So at the time of first offer, they will file the shelf prospectus. But still, they cannot give indefinite. For a normal prospectus, they said the validity period is 90 days. Here they say Shelf prospectus, a validity period not exceeding 1 year shall be specified. Validity period shall commence from the date of opening of the first offer of securities. Date of opening of the offer. This is a technical term. I'll explain it. When you come to allotment also, you will understand better. But basically, we issue the prospectus now. In the prospectus, we'll clearly say the offer is opening from so-and-so date and will close on so-and-so date. That is called date of opening and date of closing. So this 1 year time will be counted from the date of opening of the first offer of securities. So when they issue the shelf prospectus, they will say first series will be issued from 5th June. Opening date of opening of the first offer is 5th June. Closing, they might give another 15 days later, etc. Whatever it is. The point here is from that day, 5th June, we have to count 1 year. Validity of the shelf prospectus. During that validity period of 1 year from 5th June, you can make any number of series of debentures of the same class, right? No further prospectus is required during the validity period. Shelf prospectus stays on the shelf, as it were, and is always available for the public to view. Now, before making the fresh offer, I told you now, there may be some changes, material changes in the financial position. No, so before making every fresh offer, you will not file a document called information memorandum. Information memorandum. The form is Form PAS2. What is PAS? Expansion, prospectus and allotment of securities. Many of these form numbers will have the abbreviation of chapter heading or information. See, you had INC, na? Incorporation of companies, INC. Here PAS, like that. So, that information memorandum should be filed 1 month prior to every fresh offer. 1 month prior to every fresh offer. Okay. The information memorandum should contain all material facts. So, once you file the information memorandum, within 1 month, you have to make the fresh offer. Simple. So the validity of the information memorandum is 1 month. You file the information memorandum in form. Idea is if any material change in, for example, if the debt is gone up or some changes have happened in your equity base, whatever, you should put all material facts regarding changes in financial position occurring between the earlier or first issue and the current proposed issue. Suppose you have made one first issue, then second issue over. For that you filed information memorandum. Now third issue, you're going to go. So before the third issue, you should file within 1 month before the third issue, you should file all material facts regarding changes occurring between the earlier, that is the second issue, and now the third issue. You have to go through your accounts. So for this, who will be doing it? Doctor? Company secretary? No, only chartered accountants. We will go there. We will prepare the balance sheet for that 5th June, then current, then see what are the changes. Then we will make the disclosure. We'll help them. Financial position, we will. Then company secretary will prepare the form and file it. Okay. So this is information memorandum. The idea is we don't waste our time for a series of say 4 series. Every time you need not prepare a proper full prospectus. Just information memorandum in form PAS2 is enough. 1 month prior to fresh offer. Right, sir? So the legal principle here is disclosure. In fact, the legal principle in entire prospectus is disclosure. Once you disclose to him, the investor, he is deemed to have read it. Go back to your doctrine of constructive notice. The minute I publish my prospectus, I registered my prospectus, it is a public document. See, suppose a company is fraudulent. They are filing one prospectus with the registrar and they are issuing some other document in some changes which are wrong. Now, which prospectus is valid? Not the one published by the company, the one registered with the registrar. Tomorrow the registrar will catch them and because he'll say, look here, you filed this with me, now you are issuing that, jail. That is a clear misstatement in prospectus. Okay. So the legal principle here is disclosure. Any applicants remitting subscription money shall be intimated about the changes in financial position. such applicants have a right to withdraw application. So whenever they receive an application, they will send the information memorandum. Shelf prospectus already you should have seen. So if you still feel, so you know, I didn't know about this, I relied on the shelf prospectus, but now they can withdraw. If so, the company shall refund all monies received within 15 days. So I will file the information memorandum. I'll make a fresh offer, wherein I will very clearly say, in case you want to withdraw, you can withdraw. A particular date will be given for withdrawal. The information memorandum is also going to go along with that, yeah. Then, if that guy makes the money, then sees the information memorandum, then he, within that withdrawal period, he can withdraw. Then the company should refund all monies within 15 days of that. So that withdrawal period, will be decided by SEBI. How quickly he can withdraw will be decided by SEBI. And the content of the information memorandum shall be deemed a part of the prospectus. So, actually, information memorandum will be similar to that, except that all columns will not be filled. Only material changes will be filled. And it will become part of the original. That's the point. So, every applicant should read the shelf prospectus along with the information memorandum. Along with the information memorandum, then he has to invest in the company. A prospectus which does not include complete particulars. So now we are moving from shelf prospectus. If you have any questions in shelf prospectus, please do. Once the validity period is over, if sir, in 1 year, if company didn't complete all the issue, then will company again what to do? Within 1 year, you are not able to go ahead. Fresh. Another shelf prospect, then again you go. That's how it is. Yeah, see, in a way, you are making further issue on a single prospectus. You are filing one prospectus, and on the basis of one single prospectus, you are making further issues, series of issues. Shares can also be issued that way. So that will not be called FPO, further public offer. It is one IPO only. But generally, my dear friends, practically, I have not seen IPO coming in shelf prospectus. I have not seen, only debentures will come in. Listed company got debentures, they will go for shelf prospectus. As a series, then the idea is, I may start a project in here. I need 10 crores by the end of the 1 year. Right now, I need only 25 lakhs or 2 crores, whatever. So I'll go only for that. So that way, it will be useful. See, law is meant for our use. So don't ask questions which are so complicated that it will be impractical. You understand? Simply to test the law, don't raise question. Don't worry. The law is there to help us. The law is meant to support us. So if you keep on, if I do this, what will happen? If I do that, if you do it, you will be punished. That's all. If you don't comply with the law, you will be punished. So after 1 year, if you are not collected 1 crore, what to do? We told you 1 year, you are not done it. So issue a fresh prospectus issue. That's all. Can a company hold combination of shares in demat list? No. Right? Once again, listed company, no. Unlisted company, both can be done. No problem. See, you can go for dematerialization. If some donkeys are not willing to get it dematerialized, they will hold in physical form. Then you cannot refuse to transfer those shares because you are not a listed company. But listed company, 100% dematerialized. You cannot register the transfer unless it is coming through a DP dematerialized form. Okay. I am not aware, sir. Currently, recent shelf company, I will check up and get back to you. Any question answering will be on 31st because tomorrow class very near. Not today. I go to bed. Tomorrow morning I can't. I am not God. 31st I will answer. Any company name who have gone shelf prospectus. I will check up Rakesh Yuvraj Patil. But you can also go to Google and educate us. What do you say? Google today is open, na? Google is the ultimate knowledge democracy. Everybody can get access to knowledge. I will also check. Prabhas Jain ka question is still lingering. It will be answered tomorrow, hopefully. It's a nice question. I thank you, Prabhas Ji, for that. Okay. Shelf prospectus only allowed for debentures or bonds? No, not only. I'm not saying only. But I have rarely seen a company use shelf prospect. Rarely. I have personally never seen a company use shelf prospectus for shares. They use it only for debentures and bonds because it's convenient for them. Okay, there's no prohibition, right? See, it's available. Nobody uses it. No specific time gap. You decide what you want to do. Whenever you want to issue fresh issue, you go for information memorandum. Within 1 month of publication of information memorandum, you have to ensure that the issue is announced. Rule 9A. What is Rule 9A? I'll check up and get back to you. When listed company issues a new class of shares, it will be a fresh. It will not be covered by that exception. Good question. It will be a fresh IPO of new class of shares. It will not come under IPO. No, it will come under IPO for that, for those shares, because they are not of a class which is already being quoted. Na? They are different. So, chalo. Just making a note of these points because I don't want to forget it. So that I would like to answer these queries also. But COL, though it's not possible, by 31st I will answer. Past interest of promoters, etc. It's a good question. I don't want to answer in a hurry and make an ass of myself. I'll check up and get back to you. What is Rule 9A also? I'll cover it. You see, once upon a time, I used to know these section numbers and all that by heart. But post 2013 Act, seriously, these section numbers are not going into my head. So once upon a time, I used to know the section, content, etc., etc. That was peak of my teaching, 2012, 56 Act, literally. 2013 Act, I seriously didn't like it. So I stopped teaching in 2012, honestly. 2012 till pandemic, 2020, 8 years I never taught, except in AC's Institute. That too not company law. I used to teach other subjects there, like taxation. So when this pandemic came, our institute, I had registered with our institute. They were calling for this BC, LCC or whatever you call it, which somebody has really appreciated, 100%. You should all take advantage. LCC is a very good way of revising. As she rightly says, just listening to the lecture, 1 level. Then you go for this. 2 levels you can, 3 revisions you can. She's absolutely correct. So then only I started reading 2013 Act itself. Except for 185, 186, that family I used to do. Other than that, only for preparing these slides and all that, I started reading these bloody sections and all that stupid English. It was a torture. But what to do? I'm forced to read the nonsense English written by these fellows in MCA. I have to teach you also. It's my real. Anyway, so that is why I'm not very familiar with these sections and all that. Suddenly, if you ask what is Rule 9A and all, I cannot tell you. I just go and reference. Quantum means quantity. Absolutely correct. Quantum is another way of saying quantity. Quantum of Solace it's a James Bond movie. Daniel Craig. First movie, I think. No, first movie was Casino Royale. Then Quantum of Solace. Okay. A prospectus which does not include complete particulars of the quantum or price of the securities included therein. Quantum or price means, see, I have another 4 minutes to go. This topic is little detailed. No problem. Because of queries, I'm getting a little. It's okay. We will complete it easily. We'll complete within the duration. I'll tell you the problem that companies are facing today, and then we will see the red herring prospectus, how it helps them to solve the problem. Problem companies are facing today, when last 2006 also, 7 also, 6, 5, 6, 7, 2004, 5, 6, 7, that was an IPO boom at that time. When, the problem with companies were facing was how to price, because I should not make that mistake. Even merchant bankers were struggling. See, I'll tell you, suppose a company is really having, say, 20 years track record, good valuation. So merchant banker thinks it is worth 600 rupees per share. That means 10 rupees face value, 590 rupees premium. But the management thinks it is 800 rupees. So nobody knows what is the correct valuation. Right? So what they do, what is their problem? How to fix? Suppose they fix it less, gone. Because what happens? The public will get it at a throwaway price or a lower price than the thing. Suppose they fix it high, what will happen? The public will not subscribe. It will become undersubscribed. So it was such a nightmarish experience. That is why investment bankers are paid so much. They get that headache they have to resolve. But one method of doing it is, instead of telling the price, you issue a prospectus. It will contain all the particulars, everything. Legally, it will be pakka. All material facts, everything, accounts, everything will be there. But two things will be missing. What is that? Quantum, price. How many shares? Price. This is called red herring prospectus. Usually, the red herring prospectus will not be given to the public. But today, they are giving it to the public also. But in those days, it used to go only to the qualified institutional buyers, QIBs. Today, even public is getting it. So the red herring prospectus will facilitate the price discovery process through book building. Book building is a method of getting bids. So the merchant banker, now we already saw, that fellow will become the bookmaker. Okay, not bookkeeper, bookmaker. He will open a book, means he will start. So they will issue the red herring prospectus and then bids will come in. Means everybody who is receiving the red herring prospectus will send a bid. Means what? They will say, I am willing to take 1 lakh shares at the price of so and so. They will do their own valuation. So all the bids will be coming to the bookmaker or book builder, right? And he'll keep it. So that the company at the end of this exercise will know what is the demand and what is the price band. So which is why you see price band. So if major quotation, major bids, are hanging around 700, 650, 700, then they know, okay, merchant banker wanted 600, company wanted 800, but the mean, when you put a statistics there, the mean clustering around 650 to, let us say, 700. Then they will fix 650 to 700 or 625 to 725, whatever, 625 to, there's no rule. This is called price band. They will again issue a fresh prospectus, no properly. They will put the amount, number of shares and all. That will be normal prospectus. So the red herring prospectus is a method of assessing the demand and price band. So the red herring prospectus is usually sent to QIBs. QIB. Please note it. QIB means qualified institutional buyer. If you think you will forget it, write it down. Qualified institutional buyers. If you want to know who are all qualified institutional buyers, go to SEBI website, search, or just to put qualified institutional buyers in Google, you will go to SEBI website, you will see. For example, all the financial institutions are QIBs, banks are QIBs, LICs are QIB. So these are all institutions. They will see, so they have funds which they will invest in companies. Huge amount, not small, huge amount they will invest. So they will get preferential allotments. Because when I go to a QIB, I can immediately allot, say, bulk. And they also have better equipment to value. In addition to QIBs, you have people called HNI, high net worth individuals. High net worth individuals. For example, Azim Premji is an HNI. Right? Am I correct? A lot of people are there who, Rakesh Junjunwala, HNI. So they have huge money. They made so much money in the market. They are so rich so that they themselves can buy bulk in one company. They can even acquire 10% stake in that company. That's the level at which HNIs operate. They're individuals, but they have huge financial resources. They're rich. So they also can buy in bulk. Now, so these people get. That is how it was in those days. Then all the bids will be received. Then based on this, the company will issue a normal prospectus giving price band and number of shares. Whichever QIB made an application, now the bid, now that will become application. So, but he still has an option. If he see, he would have bid at one price. The price now offered may be more than that now, so he might avoid it. So that is how they do it. Okay. So the QIBs and HNIs will send in bids mentioning the price offered and number of securities to be taken. So this will be entered in the book. At the end of the exercise, they will decide what is the ideal price. They will put the price there and send it. Nowadays, you know what they do? They issue red herring prospectus to both QIBs and HNIs together. In that red herring prospectus, they themselves give the price band. They don't allow these people to bid. They give a price band. Within that price band, they want you to bid. Then they see which is the best one and allot it at that price. Then, if the price allotment price is more than what you bid, you have the right to withdraw. The red herring prospectus should be issued before the issue of a prospectus. Nowadays, you know, the red herring prospectus, if you see, you'll find price band is there. Okay. They themselves give a price band. What they will do, the merchant banker will make a informal survey with the QIBs and HNIs. And also he will do his own valuation. Then finally they'll come out with the price band and send it off. Okay. So I'm sure you're having a lot of questions on this because you're all new, you know, some of you are fresh from college. So you might be having a lot of doubts. I'm doing my best to explain it. Simple words. Idea is the challenge of not being able to predict number of securities and price is solved by before issuing a prospectus, we issue a red herring. See, red herring actually means misleading, not real. That's what it means, not real. Okay. Usually, you know, in detective stories, especially Agatha Christie, when you are reading the story, you will find clues are there. The author will give clues. Some of these clues are false. They are called red herrings. So if you are following, if you are an Agatha Christie fan, you will understand. If you are trying to read and you are also trying to, along with Hercule Poirot or Miss Marple, you are trying to solve the thing, then you will be misled by the red herring. Because the red herring has no connection with the murder. So misleading or not the original, not thing. It's not, but it is sent only for the purpose of finding out what is the demand and what is the price at which people take. Once that is finalized, the prospectus will be issued. The red herring prospectus should be filed with the registrar at least 3 days prior to the opening of the subscription list. As far as prospectus, RHP, red herring prospectus is concerned, content is the same. Everything is the same, except instead of they won't give the price, they won't give the quantum. That's all. Okay. Now, once the red herring prospectus is issued, price is determined. Now you're going for a fresh prospectus. Be careful. Suppose there is any difference in data between the red herring prospectus and normal prospectus, that should be highlighted as variation. So because people are bidding based on the red herring prospectus. If anything has changed in the meantime, you should be able to, you should give them, these are changing, and that should be highlighted as variations in the prospectus. Now, we have sort of come to this point. The idea is very simple. I am extremely happy. We can extend our timing for today's. I would also love to do that, but then some guests are coming around this time. So the time now is 20:35. I enjoyed. Anyway, don't worry. Kalto, we will be starting again on abridged and then deemed, and then we'll go on. Fantastic. Really enjoyed the evening with you and looking forward to meeting you all again tomorrow morning, 7 a.m. sharp. Okay. I know Sunday morning, what to do. CA students, we have to sacrifice everything. Even we have done that now when we were students. No Diwali, no holiday, nothing. 3 years we surrender our life. But for a whole lifetime, you can be happy. You will be financially successful. You sacrifice 3 to 4 years of your life. Your entire future will be, that's all, guaranteed. Okay? Think like that, motivate yourself, and we'll meet tomorrow at 7 a.m. Good night. Class over, sir. Ram, class over.